am Juan. Welcome one, welcome all. I almost said DeFi, crypto, and airdrops, but this is not. This is Crypto and Chill with myself and Jeff, where we just kind of relax on Tuesdays and Fridays and just kind of talk about what's going on in the markets, talk about life. Pour yourself a drink if you want. I actually went to town, did a little grocery shopping, and stopped by my buddy and his wife's Thai restaurant and got a Thai tea. So,
Ooh,
no,
you got a
freaking delicious.
TT.
It's basically like sweet tea with half and half in it, but it's from Thailand. Like the tea is actually from Thailand. I'll take you guys by there. All you guys that come up next month,
Yeah.
I'll take you by, and we'll get Thai food. I got some pad Thai for after the show today.
Oh man, I love some Thai food. There's a really good restaurant here locally that has just amazing Thai food.
Well,
It's called House Thai.
I'm sure that you have a bunch of stuff around you, but up here, I mean, it's quite the unique experience because she's actually from Thailand, and I live in the middle of BFE, so like a small town, in the middle of freaking nowhere, having an authentic, like she was born and raised and lived her whole life in Thailand until she married my neighbor. So, I've said it before, her and him are the ones that helped me with the cabin because he was a contractor for like 40 years and then just got too old to do contracting and, working on houses and climbing up on roofs and stuff like that. And so him and his wife opened a restaurant. And so, yeah, it's definitely a lot of the deliciousness that goes on at that place.
Oh man, I was gonna make a joke. I was gonna say pad Thai is your favorite. Yeah, because you like to be tied up. Boom.
So yeah, so what's up, Zip? What's up, Ellie? We got people starting to trickle in. So why don't you introduce the socials and we'll get at it. I got a couple of things to talk about. I know you got a couple of things to talk about because like somebody in our Discord. This is what I love
Scotty
about
D.
Discord. What's that, Scotty D? Yeah,
Scotty
that's what I
D.
love about our Discord. We got some people in there that love dropping alpha, and Scotty D, is definitely one of them. He's one of our moderators, and he's always dropping charts and like stuff that he finds in DeFi. So yeah, that's awesome.
Mm-hmm.
Yeah, go ahead and introduce the socials, and we'll get right at it.
Hey, happy Tuesday, everybody! Here at the Node Network, where me and Mike go live for our Crypto and Chill every Tuesday and Friday, 5 p.m. Pacific, 8 p.m. Eastern. We have a whole host of shows throughout the week for your viewing and listening pleasures. From the Node main show every morning, Monday through Friday at 9 a.m. Pacific, and our Crypto and Chill Tuesday and Friday, 5 p.m. My blockchain report segments Monday, Wednesday, Thursday at 11 a.m. Pacific. The Sovereign Soil, are you keeping that at 6 on Saturdays?
Yeah, I was going to do one today, but just with with the market wrap up, with the live coaching with Ellie, and then the show this morning, and then this show, and I needed to go to town, do some grocery shopping.
Oh yeah,
I need to do it. I need to do an episode. I haven't done one in a week. I want to talk about basically what I'm doing for my brother Taylor right now. Is he wants to buy a piece of property, that he can use for his business as like a, kind of a corporate getaway, for his law firm. but also that he can use as like kind of a bug out location, that if things get shitty, that he has a place that up here by me, that he can get up here.
Yeah, that would be perfect, man. Give us some insight.
Well,
Some
just how to
tips.
pick a property, because I mean, a lot of people, they don't. There's a lot of things they don't think about, and there's a couple of things I almost screwed myself. The property that I have here, I was looking for. I had, to get a septic. You need somewhere for your, all your gray water to go, and so I didn't think about it. I didn't. I just figured that you could dig a hole and put in a septic, and it was no big deal. But come to find out, you have to have an inspector come out, and they have to do a perk test to make sure that the soil will actually absorb all of it, and all that kind of stuff. So I have a lot of clay, modeling clay, in on my property because it's at a base of a mountain, and so a lot of that sediment and stuff like that, has settled down here. And so I almost wasn't able to have a septic. So I would have had to have basically had a dry cabin and figured out like like a composting toilet and all that shenanigans. So yeah, I almost got hosed. So, but anyway,
Damn. Yeah, knowing that ahead of time will save you a lot of money and headache. But yeah, so keep an eye out for the Sovereign Soil. Great episode. And David's Daily Market Wrap Up, Monday through Friday at 1 p.m. Pacific. Every Tuesday and Thursday, he's meeting with Ellie, and a member of our community, taking her through beginner to advanced DeFi steps. So creating a wallet, how to deposit money in the wallet, access DeFi protocols, what to look out for, security best practices. And today they were talking about liquidity pools, wide range or concentrated liquidity pools, V2, V3. So that was really cool. So if you are a very beginner, this is a great place to start because they're actually going through the motion and not just telling you. My Saturday Night Fever, Saturdays at 6 p.m. The Red Pill, Thursdays at 6 p.m. And Gaming and Chill, Sunday and Wednesday at 6 p.m. So we got a lot from crypto to music to gaming. So I said, not just for your viewing, but also listening pleasure. And all the links right here. Our Discord, it's at no cost. So you can come in there, chat with the community. And like we were saying earlier, we have some great people dropping some awesome alpha all the time. So we definitely appreciate it. And don't forget to check out the node.pro because this has a lot more stuff like beginner to advanced courses, educational courses that are at no cost to you. And it's awesome if you don't know where to start, just like with the free coaching that David's given Ellie on the YouTube channel. I mean, this is an interactive course with lessons and quizzes that will take you through not just crypto strategies, but investor mindset, money basics, fundamentals, and staying safe, all kinds of great stuff that people charge thousands and thousands of dollars for. So take advantage of it, please.
Well, and not to mention our community. Under that community tab, they can go there. They can join the Discord. They can join the University School. Yeah.
Yep.
I mean, there's just a ton of stuff. We're about to launch. Finally about to launch the newsletter. So that's only $20 a month, so 66 cents a day, and that's that fully automated newsletter where you pick the stocks, the crypto, the commodities, whatever that you want, as long as you know the ticker, and it generates your own custom newsletter that is for your assets, not the assets that we pick. You pick what you want the news for, your trading ranges, the liquidity pool ranges, the news, all that stuff. You pick it, and it will pull all that data and charts and tables and all that stuff. And so basically, while you're pouring, getting your cup of coffee or cup of tea ready, you hit generate, walk away, go do that. By the time you get back, you have a 5-10 minute read of everything that's going on with your portfolio. and you can just go, in 5-10 minutes, you can go through it and go about your day.
Yeah, and you get it twice a day, pre-market and post-market. Traditional when the market's open and when they close. So, that's nobody else has a fully customizable newsletter. It's just, what they deem to be important that day. So, yeah. So that's awesome. David has one-on-one private coaching. If you're looking to explore that, he does have a free or at no cost to you discovery call.
Yeah, you can't use the F word. It's supposedly it's not a good word to use when you're on lives.
Yeah, shame.
Yes, been a bad
Shun
boy.
the non-believer.
Yeah, that's right.
And we have a store launching soon too, with books and merch, all kinds of fun stuff. So if you want to support the channel, because we don't take sponsorships or money from any projects, we just tell it like it is, straight up. But if you want to support us, that's the best way to do so. And follow us at the Node channel on Twitter and on the arena.social. So 142 followers, nice. We pumping up.
I mean, we just like a couple of weeks ago is when we started that account. So yeah, it's definitely growing.
Don't you know? Pump it up. You got to pump
Dude,
it up.
I mean, we're getting some really good interviews lately. We had Shaw, we had Dagnum. We're about to have Jesse. He was in the chat on this morning's show. Yeah, the CEO of Amboss and RailsX. So a Bitcoin native, basically DeFi that's being built out, and so yeah, I mean it's. I really think that one. I'm waiting. We went through some of the research that David did, but I want to dig super deep into it because I want to make sure that we find any potential, if there is any potential downside, to it. But I'm pretty bullish on it because one of the big reasons I haven't really gone into Bitcoin harder as far as investing is just the lack of being able to earn with it. Most of the stuff that you see is like a fraction of a percent, that you earn with Bitcoin, unless you really put it at risk and liquidity pools and things like that, where you can get that in permanent loss. And I really want to do anything I do with Bitcoin. I want to do low risk, very low risk, and
low fees too.
Yeah, and so this is being built out.
Important.
Well, it's being built out on Lightning, and so it's faster and cheaper. And then it was showing on their website around like 5-6% that you could earn per year, which doesn't seem like a ton, but I mean that's free Bitcoin. If you're going to hold Bitcoin, and it's self custody, it's non-custodial. So David was pointing out potential.
You got 100,000 in Bitcoin, man. The 5%. I mean, that's an extra $5,000 a year that you're just pocketing.
Yeah, I mean it's better than a kick in the nuts that you get with a savings account at a bank where you don't get shit.
And they might charge you a monthly
they're
fee.
going to charge you fees like a maintenance fee and this, that, and the other thing.
Tickle the taint fee. Yeah, the channel is more of a grower than a shower.
Well, it's we all got to work with what we got. Yeah. Let's see. The guys came out at the best time. A little meow was hit outside my house while I was out there. Oh, that sucks.
Damn.
Oh man, little meows. Yeah, I've been spotting this little meow outside my cabin. That's running around.
You spotted Sunday?
Yeah, it looks a lot like Cass, and coincidentally, like the one your meow that's behind you.
Little calico.
Yeah.
Calico.
Yeah. Well, shit. Well, you know what? Start. Go ahead and lead with your stuff first. You know, whatever you got that Scotty D shared or whatnot.
Yeah, it was the Meso token. So borrow, earn, and spend against your Bitcoin. So this project I was farming like over a year ago, and I didn't get my. I got like 151 Meso tokens, but which is like $15 right now. But the chart, he posted the chart and today, and I totally forgot about it because the token launched on the 1st, April 1st, funny enough. But I mean, look at, so it launched at
Oh, damn.
what, 5 cents, and then spiked up. This is April 1st, came crashing down, and then it's been at 3 cents for the past couple days, and then just fucking boom. I mean, that's what is that in let's see. What's that percentage that it went up? Damn, 250% in a day from 3 cents to 10 cents.
Yeah.
Yeah,
Did,
this is what Scotty was talking about.
did you get an airdrop or?
Yeah, that's what I was saying. I got 151 Meso tokens, which it's locked for 6 months. But
Oh shit! All right.
yeah,
Hey.
but looking at it, this is the dashboard right here. You can connect your Bitcoin wallet here and your Ethereum wallet. So you can deposit Bitcoin, and I've deposited Bitcoin on here before, but let's check out this overview. I think I have like $30 staked in here. So you can borrow against your Bitcoin. I think they have like 8 million in TVL right now. But they actually launched their mainnet earlier this year. So it's fairly new, but oh no, they have 19 million in TVL on their locks. But I don't know how much of that is due to this 6-month lock that they require.
Right.
So yeah, so they have locks. You can receive VE Bitcoin and earn chain fees.
Oh, check this
Let's
out.
see.
Not Scoop Boy says that the Mezzo Stables pool on Arrow has been printing. I'll
Oh
bet
yeah, they do have
with it
pools
being
on there.
new, I'll be willing to bet because people are wanting to get exposure to it, so people are swapping for it and things like that. So I'll bet you there's a lot of fees being generated on Mezzo pools right now. Good find, not Scoop Boy.
Yeah, right here, liquidity stats, 1.9 million in volume. I guess that's the past 24 hours. TVL's 8 million. Their vaults. See how much is deposited in here. Oh, that's for me. Yeah, 2 million in their Bitcoin vault, almost 2 million in their BTC vault. Yeah, what is maybe we should check on. Hey, come on, little miss. Yeah, let's check the aerodrome. I need the. Yeah, is anybody in those pools? Like Scoop Boy, are you in the? Oh, was that no impermanent loss printing? Arrow that's probably printing yield right now.
I'm trying to figure out what he's saying. No impermanent loss printing arrows. That's probably printing yield right now for sure. Do you understand what he's saying?
Not really. That's why.
So not Scoop Boy says I threw $500 in for fun on launch and have made like $30 on a stables pool. Yeah, I mean, the only thing I would suggest is just, be careful with that one. I mean, it's not like your ass on it, but the stable pools, that it accentuates the impermanent loss. So David says if you have no impermanent loss, then your yield in arrow is profit. Okay.
Yeah, so this is probably the pool that he's looking at.
Yeah.
Damn. Yeah, I'm sure this pumped the past or a couple days ago. Yeah, this is the daily.
Yeah, anytime you can get into pools, and especially if you can kind of see it coming, like if a token is going to launch, and there isn't like a whole lot of liquidity. And David, please by all means, correct me if I'm freaking giving bad info. But kind of one thing that I've noticed, and the way that the new Arrow platform is going to work, is if you're able to front run, getting into some of these pools, before a because they're wanting to get away from basically people providing liquidity for pools that are currently have a lot of volume, and get it to where people are just putting their liquidity places and spreading it out. They don't want liquidity moving around to try to chase the yield. They want to make sure that it stays. So they're actually building it in so it benefits you if you have liquidity in a pool, like say a meso pool, and then all of a sudden there's like a huge rush, and there's a lot of fees being generated by that liquidity pool, the swapping. You're going to make more. Like say you put $5,000 in, you're going to make more of the fees than somebody that jumps in after that volume pumps and they throw 5,000 in. So they're going to actually incentivize people for providing liquidity, not just when there's a surge.
Yeah, he said no. That's the Meso token. Oh, MUSD. Sorry. He said, "What's the chart of MUSD look like if it's not keeping a one peg?"
MUSD. It's the Meso.
Yeah,
that's what we're talking about. So it's a Meso USDC pool. Yeah. So if it's not keeping a one peg, then you have shit tons of impermanent loss, which defeats the point of the 400% APR most of the time. Yeah, that's why I don't chase those APRs, and I only get into stable pools if it's like BTC, like a BTC stable or an ETH stable. Simply because if it goes to the downside, I end up with a larger amount of Bitcoin or ETH, to where I can hodl that and end up, as long as that asset goes back to where it was at before, and higher, then I end up with more of that asset. Whereas if it goes to the upside, I'm not going to get as much profit, because it's going to be DCAing me out of the stronger asset, ETH or Bitcoin, into stables. And so it's almost like I'm taking profits on the way up, which in a way I'm okay with, because it's if you get a pullback, then you can use that stable, that USDC, to buy more of it. So it's not an exact science, but for me, I mean, it's not an exact science, but it's kind of what I've done with ETH, and managed to build a pretty nice bag of ETH, because of it.
Yeah. Have you noticed anything since? Well, I guess never mind, because the Aerodrome platform hasn't launched. It's not launching till July. I'd be
Yeah.
curious to see how the emissions and stuff are going to change after
Actually,
that.
let me check something real quick. I'm waiting on that last flight school bonus. I was told by the aerodrome team it should be today or tomorrow is when.
Oh, nice.
So hopefully tomorrow. I looked up on chain and I see where I got 467 arrow tokens. It's just not showing up on my aerodrome account yet because I want to put it in that VE Aero Maxi relay. But
VE
well,
Aero.
are you done with Mezzo or you got more?
Yeah. No, and I'd be curious to know David's thoughts on this, like as another avenue for Bitcoin, like earning yield on Bitcoin. I mean, I know it's not like it's brand new and shit, but just something kind of keep your eye on if it's. We're all looking for a way to put our Bitcoin to work.
All right. Well, I mean, this is kind of the couple of news tidbits that I was able to come up with. So, Bitcoin's multi-month high. Bitcoin is leading a rally, hitting its highest price in 2 months. This is fueled in part by Goldman Sachs filing for a new Bitcoin ETF that invests in other Bitcoin exchange-traded products, signaling deeper institutional integration. So let me share this. Let's see.
A little bit of this, a little bit of that.
A little bit of this and a little bit of that.
More Bitcoin.
Right. Right. All right. Here we go. Share and then throw this up. Let's scroll down. Here we go. So let's see what it has to say. The Wall Street giant filed a prospectus for a Goldman Sachs Bitcoin Premium Income ETF. The fund would provide exposure to ETPs that hold Bitcoin, options on spot Bitcoin ETPs, and options on Bitcoin ETP indices. So maybe David would be interested in this. He's huge on those options. He loves options, but I wouldn't think that he would be interested in this, though. I
Gotta
think
have some options, man.
it's all about options. All right. So Goldman Sachs wants to launch an exchange traded fund that gives investors exposure to Bitcoin without directly holding the cryptocurrency. The fund, called the Goldman Sachs Bitcoin Premium Income ETF, plans to gain exposure by investing in exchange traded products that hold Bitcoin, along with options tied to those products and indices tracking them. I can't say I saw this coming. Bloomberg senior ETF analyst Eric Balchunas wrote in a post on X. I kind of just thought JP Morgan and Goldman Sachs would sit crypto out in favor of competing in other categories. Unlike spot Bitcoin ETFs from firms like BlackRock and Fidelity, which directly hold Bitcoin and closely track its price, Goldman's proposed fund would sit one layer further removed, gaining exposure through other investment vehicles rather than holding the asset itself. Since the value of spot Bitcoin ETPs fluctuates with the price of Bitcoin, the fund will gain exposure to both the increases and decreases in the price return of Bitcoin experienced by the spot Bitcoin ETPs, in which the fund invests, Goldman said in the filing. All right. So let's see what we got. So it says if the value of the spot Bitcoin ETPs and Bitcoin ETP indices appreciates in value beyond the strike price of one or more of the call Bitcoin ETP options that the fund has sold to generate income, the fund will lose money on those short call positions. These losses will limit the upside return of the fund's long exposures. Interesting. So,
yeah, because if you're selling options, you don't want it to go higher because you're essentially shorting it. I mean, if you're selling calls.
Yes, yes. There will be no pegging.
No.
There will be no pegging unless it's a stable coin. You can peg the
Okay,
stable.
yeah.
You can peg the stable coin. All right. Let's see.
Peggy Bundy.
Yes, yes, or Peggy Bundy. All right,
Oh
there.
yeah. Zip. I'd love to hear David's TA on that Rave coin that's been fucking just ripping.
Yeah, that might be a good short. A good short to get in on. I mean, what is it? You know what? Let me hit another couple of these. If you want to look up
It's
that
hitting
rave,
$18 right now.
well,
It's
look up and see what that rave token's all about. While I hit another couple of these news
mhm.
articles. Um, Looks like an institutional hedge narrative. Bitwise analysts are suggesting that ongoing geopolitical tensions are actually boosting Bitcoin's appeal as a safe haven, even floating a $1 million price target as a possible baseline in long term scenarios. So, I mean, people love throwing that, nice round number around, that $1 million price target for Bitcoin. And I'm sure at some point, it could reach that. I think that's much further down the road, but that's just my personal opinion. Um, I'm sick of that quantum debate. I don't want to talk about that one because I hate people talking about quantum computing and it's a threat to Bitcoin. Don't buy Bitcoin. And I'm like, motherfucker, if quantum is an issue for Bitcoin, it's an issue for everything. If we're worried of, if we're worried about freaking quantum computers cracking Bitcoin's cryptography, everything on this planet's already been cracked. So it'll be the least of our freaking worries. Plus, not to mention that there's a new Bitcoin improvement proposal, BIP 360, to make the network quantum resistant. And there's a lot of projects out there, that are working on fortifying themselves, against quantum. So it's kind of like David talked about. It's kind of like that Y2K thing. They'll by the time it rolls around, they'll have it figured out. To where things will be hardened against quantum. It's a lesson you don't want to learn the fast way.
Ooh, how's quantum hardening gonna feel? You gotta have quantum hardening. Oh shit. Sounds intense.
He's not Scoop Boy. Sounds like I had a bad experience. No, I can definitely say that I've never had an experience with that. But I've done plenty of gay things. Gay chicken. Being in the military, you got to be the master of gay chicken. If you're like have phobias of people that are in those lifestyles, you wouldn't make it very long in the military. It's yeah, we have a thing that we call gay chicken. It's basically be as gay as possible, and whoever chickens out first is the loser. And so that's a game that we played for fun. So it's like you got to have thick skin if you're going to be in the military.
Yeah.
All right.
Oh,
Let's
I'm glad I
see.
had brothers, man. That was
Yeah. All right. So in DeFi, so it looks like institutional security shield, Cat, Catalyst, Catalysis, Catalysis, launched the first vault native risk coverage on Ethereum today. It uses restaked capital from EigenLayer to provide deterministic on-chain insurance for institutional DeFi deposits, aiming to solve the lack of coverage problem that has kept big banks sidelined. Interesting. Actually, I want to read more on that. So, Singapore. So less than 1% of DeFi's TVL is covered today. Catalyst is launching its mainnet on Ethereum to change that, bringing the first vault native risk coverage to institutional vault deposits. I mean, this would be huge for things like Morpho and all these different vaults. And Gauntlet is one of them. So it looks like at launch, coverage is live on the Gauntlet curated wrapped ETH vault on Morpho. Imagine that. I was just fucking talking about it. So Gauntlet curated wrapped ETH vault on Morpho, backed by capital specifically delegated to absorb risks. So basically, insurance on these vaults. So that's huge. Institutional participation in DeFi remains limited because of it. DeFi vaults have continued to mature with risk management frameworks and guardrails to protect depositors. However, to date, vaults have lacked a native mechanism to define and bound their downside before deploying capital. As a result, despite growing interest from TradFi allocators, crypto liquidity pools, and fintech partners, on-chain capital deployment remains limited. Most on-chain capital remains exposed to risk, such as curator mismanagement, smart contract vulnerabilities, which is a big risk, and asset volatility and depeg events. Depegging is much better than pegging events. You don't want to be on the receiving end of a pegging event. So you got to hedge your risk against pegging.
No judgment if you are. No judgment if you are.
No judgment. No judgment if you're into that kind of thing. If you're into pegging risk, you know it. We don't shame here. We don't shame. All right. So most on-chain capital remains exposed. Catalyst enables risk coverage for institutional capital. Catalyst introduces a vault native risk coverage layer purpose-built for institutional DeFi. Restate capital from EigenLayer backs each cover pool, a risk-isolated pool that aggregates coverage capacity for a specific vault. The coverage contracts are embedded within vaults, execute deterministically, and settle on-chain. Coverage terms are defined at the point of deposit, and payouts trigger automatically with no intermediary required. Love that. So basically, it sounds like a smart contract that once triggered, it automatically pays out. At launch, it is embedding vault native risk coverage within the Gauntlet curated wrap ETH vault on Morpho, as I already mentioned. Risk coverage makes DeFi vaults deployable for institutions. Mainnet marks the first instance where DeFi has a complete infrastructure to support institutional capital at scale and offer legible coverage parameters for their deposits. This I'm pretty bullish on this. So yeah, David, this might be something that we need to talk about tomorrow. This is going to open up a lot of, because like it's talking about a lot of institutional capital. They want to see insurance. They want to see that they are protected, and because they have an obligation to their investors to whenever they are managing their assets, their liquidity, that they have to ensure that they're hedging the risk and and doing their due diligence and all those things. So this makes these assets much more appealing to institutional asset managers. Yes.
Whoa.
DP insurance, it's at the institutional level is important. What do you got going on there? You got
you just tried to jump on my shoulders.
like burrowing in, and dude, my cat's been doing that a lot today too. She has been clingy as shit.
Oh man, there must be something in there with all the cats today. What you want, huh? He's like, hey.
All right. So, what else we got going on? Oh, it looks like some governance friction. Tensions are rising in the Aave DAO, where the founder's firm is being accused by some contributors of a power grab as they push for V4 of the protocol and faster real-world asset integration. Let's definitely read that one. Here we go. All right, let's see what he has to say. All right. On Sunday, Aave creator and Aave Labs CEO Stani made a bold proclamation: Aave will win. Aave DAO, the cooperative that governs the 45 billion DeFi lender, had just passed a landmark vote that redefines its relationship with his company. I'm not going to even try to pronounce his last name. In exchange for the DAO providing funding to Aave Labs, starting with a whopping 25. What's up?
I think it's Kulachov or something like that.
Yeah. So this is why the actual DAO, I believe it's like ICE or something like that, ended up leaving. Is this? I believe they called it the Aave will win proposal, of where basically they got this 25 million in stable coins and 75,000 Aave tokens. The firm will direct 100% of revenue from Aave branded products directly to the Aave DAO treasury, which is basically Aave now. My understanding is that they control like 25% of the vote directly and another large portion indirectly, because that was the big issue that the actual DAO had with this Aave will win proposal, with the 25 million in stable coins and 75,000 Aave tokens, was that that basically the Aave organization was able to vote that to themselves, was what they were claiming.
Yeah. That's what scares me about the whole on-chain governance, where you can accumulate a large amount of tokens and use them to your advantage. And initially I thought like, oh, this is great. You have a voice, you can vote, if you have a certain amount, but then it's like, oh shit, well, what if these people that are controlling it get a large share of tokens and then they vote with their allocation, like, okay, we're going to control this and where it's going to go. And then you can submit proposals and, kind of steer it how you want. And talk about free and fair elections. That wouldn't happen.
No, and David's right in the chat. He was, that's something that we've been reporting is, if it was just that the DAO left, I could just see that, being the cost of doing business, that they had a disagreement, they split ways. But some of the things that they were saying, that were going on behind the scenes are of concern, and taken by itself, is a he said, she said kind of. But you add to that the engineering team, basically the whole engineering team that built V3, they left as well. Not to mention that more recently, you had Chaos Labs, which was basically the security team, that they left. So you have three key legacy, parts of the team that have left, within, 5-6 months of each other. That's not a good look. When you have, multiple, the people that built V3, they basically where all the liquidity lies on Aave, because there's only like 20 million in V4. The rest of those billions of dollars are in V3. So you lost your entire dev team for that. That creates a huge vacuum of knowledge, of people that are intimately familiar with how things are built out and how they're integrated and, all of those sorts of things. So, that's a huge freaking knowledge vacuum that needs to be filled. You have the security team that was responsible for securing V3 and V4. They left. You have the DAO, which is the majority of the governing body. They freaking pop smoke. So, I mean, honestly, I feel like that there's something going on that I personally would not be having liquidity on Aave right now. And I could be wrong. I don't mean this as FUD, but we're in a bear market, and historically, when you start seeing fractures like this, it usually doesn't end well. I mean, you have FTX, that happened last bear market. You had Celsius that happened last bear market. You have a lot of these other, centralized exchanges, decentralized exchanges, and DeFi protocols that have folded, and people have lost their liquidity. And you just have to hope that you end up getting paid back eventually. And it depends on how you're going to get paid back. A lot of those FTX people, they got paid back basically the dollar value of, like say Bitcoin or whatever asset they had at that time. So, you might have gotten paid out. Like if you had, one Bitcoin, you got paid out 16 grand. You didn't get paid out 74 grand, what the current price is. You got paid the price at the time of the collapse. So you got freaking hosed. So you do you, but me personally, I'm not putting anything on Aave anytime soon. There's
and
plenty
David
of
took his off, right? Just to be safe, is what he said the other day or last week.
He said he was going to. I didn't. I didn't push him to let us know on air because it's none of my business. But if he wants to share that, that's fine. Yeah, I mean, he did say that he was thinking
risk
about
management.
Yeah, no,
Risk
he's huge
management.
on it, and he's a huge Aave bull. But like he said in the chat, it's the engineering quit, not a good look. And then he said right after that, if I own most of the governance, is it really a DAO? Absolutely. Is it truly a decentralized governing body? If one organization that runs the protocol is, basically can swing the vote however they want, just stop with the shenanigans, get rid of the DAO, and just run it like a fucking business.
Yeah.
So what else does he say? Yeah, so the V3 engineering team left, then the main risk manager, Chaos Labs, left. Yeah, no, yeah, it's just all. Oh, yeah, he says, I'm getting off Aave tonight, FYI. Yeah, so he's getting his liquidity off. But again,
I mean, we saw him a few months ago when they first had this kind of FUD going around. And then, this Chaos Labs thing just happened a week or two ago. So, it's you get too many alarms going off. Something's wrong.
Well, you know what? Let's refresh people's memories real quick. So this is the Aave governance firm exits the DeFi giant as protracted power struggle deepens. So after, I mean, this is a little bit older. What is the date? Yeah, 3 March. So this is what we're talking about. Is this just happened? Not too long ago, couple weeks back. So after weeks of back and forth, and then since then, Chaos Labs, the risk security team left. So Aave Chan, that's what it's called, not ICE. Aave Chan, oh yeah, it's ACI, is ending its work on the 27 billion lending protocol Aave. Mark Zeller, the founder of ACI, announced the move on Wednesday via a governance post. In the post, he outlined that his firm, which conducts business development and manages governance for the wider Aave community, will wind down its operations over the next 4 months. Zeller pointed to a crucial governance vote that passed on Saturday. This is what we're talking about. The Aave will win, which moved forward a proposal to grant Aave Labs, the core development firm behind the protocol, the largest budget in DAO history. Stani, the Finnish founder of Aave and CEO of Aave Labs, said the protocol will continue to operate as normal during the transition. A decentralized autonomous organization is a community of token holders who can vote and propose amendments to a specific DeFi protocol to enhance it. Zeller alleged that the vote was backed almost entirely by crypto addresses linked to the lab's entity. There is no role for an independent service provider in an environment where the largest budget recipient holds undisclosed voting power and uses it on its own proposals, the Post reads. ACI's exit from the largest protocol in decentralized finance is just the latest salvo in what has been a tumultuous passage for Aave. So again, just since the beginning of March, so what, like a month and a half, you have had again, you've had the governance body and Chaos Labs, the security team, leave. So what are we talking about? Oh, you guys are getting all degen in the chat.
Yeah.
Oh,
David said Ave's not respecting my liquidity.
You got to respect my liquidity. Well,
and we need a meme of Cartman in a cop outfit whipping the Aave Foundation.
My liquidity. So, and honestly, I don't think that what Chaos Labs was asking for was out of place, because basically what they were asking for is they wanted them to double their fee, what they were paying them to do the security, because they were basically doubling their work. They wanted them to secure both V3 and V4. So, for all intents and purposes, they're doubling their workload. And they only currently pay 2% of revenue for security. And most banks and institutions pay anywhere from 6% to 10% for security. And for tens of billions of dollars, or or multi-billion-dollar liquidity, I mean, I don't think it's out of place to ask for 4% to secure it. That's still much lower than what banks and institutions pay, and to keep the team that has been doing it and doing a very good job, might I add. I haven't heard of many, if any, exploits on Aave. So,
yeah,
just my 2 cents. Just my 2 cents.
Well, I mean, for them to just blow them off like that, it's crazy. It just that's how I feel with companies not wanting to pay their employees a little bit more. If they're doing the work, it's like, okay, well, I'm taking on more responsibility. You're gonna have to pay me more. My brother has been taking on he took on a huge project at work, a new client and stuff last year, and he's been busting his ass to be the lead on this project. And he just got he let me know the other day he got a nice bump in pay, but he's been pushing for it. So it's good to see that. But when you see companies that don't want to pay for people and what they're worth and the work that they're putting out, it's like, hey, I'm taking on this shit. You fuck around and find out.
Your cat's like, pet me, motherfucker. It's like rubbing its face on your hand, like, man, scratch me, rub my head, rub my face.
Dance. I'm a kitty cat. Dance, and a dance. I'm a kitty cat. Oh man. Yeah. What did he say? Increasing the risk Chaos Labs is gonna have to take geometrically on the new untested. Yeah.
But
and that's bad on you. And that's a bad look on you if it goes south. You're gonna be tied to that.
There's a lot more risk on V4, because those of you that don't know, there's a thing called hooks that people can attach to liquidity pools. So third parties like me, you, anybody can make a V4 hook, put it on a liquidity pool, and potentially freaking steal liquidity and shit like that. So and I'm not gonna pretend like I know everything about the hooks, but it is something I read up on, and that was a risk, that you have to look out for when you're taking part in that, those V4 hooks, is making sure that the ones that are on the pool that you're wanting to enter, that they're from a trusted source. So, yeah, I mean, do with that as you will. But yeah, what David says is true. V4, where Aave is trying to push everything, is there's much more work to do to keep that secure.
Okay, Uniswap V4 is different than Aave.
Oh
V4.
yeah, no, V4. I'm sorry, did I say Uniswap?
I don't know.
Oh, I meant Aave.
Maybe.
If I said Uniswap, I meant Aave. But yeah, Aave is V4 just means version 4. But again, Aave has those hooks on their V4. So
yeah. Okay, so the Rave DAO, this Rave token. So it's a Web3 native entertainment collective.
Hold on real quick. I want to touch on this, and then we'll end on that.
Yeah.
So yeah, Aave V4 is pooled risk, which is exactly what blew up Euler V1. So that's actually the architecture. That's, or I don't know if it'd be the architecture, but the way that the liquidity is pooled, it's not isolated in in the separate in the separate pools. It's basically all of it is pooled together. So if my understanding is that if there's an exploit that's able to get to that liquidity, it's able to get to all the liquidity. Okay, so he says yes, it is the architecture. So thank you. All right.
Shit.
So Rave, what you got?
So it's a Web3 native entertainment collective that blends electronic dance music, culture with blockchain technology. So it focuses on community-owned live events, NFT-based ticketing, on-chain participation, and philanthropy. So they launched in November of 2023 as a small 200-person after party during a crypto conference, initially in places like Dubai. It is scaled to host 20-plus events across cities like Singapore, Amsterdam, Hong Kong, and others, with average attendance of 3,000 plus per event. Damn. So their mission is to use real-world raves and festivals as an accessible on-ramp for mainstream audiences to enter crypto. Attendees get NFT tickets as proof of participation, which can unlock future perks, pay with crypto, and engage in a shared ecosystem. So,
what chain is it built on?
That I don't know.
Well, here,
the token launched back in February. So it just launched. Oh, multi-chain support, Ethereum-based BNB.
So it looks like it's a DAO as well.
Yeah, David, just April 8th, it was sitting at like 30 cents.
Well, it's what I'm seeing here is that there's only 24% circulating supply, so that would make it low float. So it basically small buys move the price drastically. So that potentially opens it up for price manipulation. So
yeah,
be real careful with this one. Well, be careful with this one because it could be getting artificially pumped.
Yeah. Yeah, and that Scoop Boy said earlier, it's ripping because the supply available is like 5 million.
Yeah, it's 24% of the supply of the total supply. Insider concentration 90%. On-chain data shows 90% of supply is held by just 10 wallets linked to the team.
Damn.
This smells like a pump and dump, possibly.
Yeah.
So yeah. Red flag, 2 red flags in a row. The short squeeze. Large exchange deposits lured traders into shorting the token only for the price to be pushed higher, forcing those traders to buy back at a loss. This, I don't know. Oh shit, the RSI right now is at 95 plus. Anything
Oh
over
yeah.
70 is overbought. 95 is historically extreme territory. Yeah. I would stay away from, yeah, this shit's gonna dumpy dumps pretty soon. So yeah, I mean maybe a no leverage
Just
short.
a
Well,
little
this might
market cipher right here. That's
well
a little bearish divergence right here.
well
Price is
and
going up,
look at that
momentum's
RSI.
dropping.
Well, look at that RSI down there.
Yeah,
Yeah,
it's
that's like
oh,
overbought
that's
as
the MACD. Let's see, where's the
oh, sorry.
I got the RSI.
No worries, no worries. But I mean, this might be a
Yeah, that's
great,
great.
no leverage short.
Oh, that's on the the daily RSI is up huge, but the 4-hour, man.
Oh, not Scoop Boy says 99.42% are held by 10 wallets. Yeah, the only person's dick I'd touch with this is somebody else's. So yeah, this 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 has this has this has VD written all over it. I'd stay away from this.
Ooh.
Yeah,
When they
when
dump,
they
you get
dump, David says when they dump, get short with 100x leverage.
yeah.
Yeah,
Can we track the whale wallets?
go go to crypto. Was it Crypto Bubbles? No, what is that website?
That would actually be great. See when they start offloading, and then you jump in short.
Oh,
Yep.
what is that? Something bubbles.io.
I know Crypto Banter did their own version of it. The Banter
No,
bubbles.
what I'm looking for is shit. What is it called?
And where can you short this thing?
Oh fuck! Somebody help me out in the chat. What is it? It shows all of the wallets, and it shows the wallets that
Oh,
hold the
Arkham?
most. No, not Arkham.
No.
It's like something bubbles.io. Um, but it shows like the wallets that hold the most tokens are towards the
Mhm.
center, and the smaller that the wallets get, it moves out, and it just shows like lines with little bubbles,
Yeah.
and so you can see. Oh, what is it?
Shit. I don't know, but that would be great to
Um,
see.
shit.
It looks like they got perpetual contracts on Bybit, OKX, BitGet, Binance, MEXC, BingX. So you could
What
probably short this on there. KuCoin.
website will show
Oh, Bubble
me?
Maps, Joseph.
Bubblemaps.io. That's it.
Hey, look at that. Shout out to the community, always dropping
Yeah.
the shit that
Thank
we
you,
miss.
Joseph. No, that's exactly what I was looking for. All right, here we go.
Michael Bublé Maps.
Yeah, the Bublé, Michael Bublé. All right, so let's see if Rave is on here. So it looks like it's built out. It looks like it's on BNB chain, Ethereum, and on Base. So let's look at. All right. So if this is it, it looks like it has that Eye of Ra. So it looks like the number one wallet has 76.91%. And David, if you do want to track this, this is how you do it. So you can click on it, and then it
Oh,
gives
go
you
to the screen.
what's
You're
that?
on the other
Oh,
screen.
sorry.
Oh.
So this is it. So
Well, it looks like
basically,
asteroids.
well, yeah, but this basically maps out all the wallets that hold the token. So like NASA's safe proxy holds 76.91% of the supply. And you can click on it and it will give you the wallet address that you can copy. So like if you want to track, on chain, if you want to track these wallets and see what they're doing, this is how you can do it. And then so you got another 10%. So that's 86, almost 87% that, and that's just in the top two wallets. And and then basically, so you got, 90 in the 90 percentages, just in these top five wallets. So,
use
a condom. Use a condom and rubber gloves when you're fucking handling this fucker.
He said 76% in main wallet. This is like the shittiest meme from 2024 on Solana. But David, Gnosis is safe. That's probably the team just holding the majority for buybacks and burns and and future events. Come on,
they're gonna make it rain on the community.
Oh man.
About the only thing they're gonna do is they're gonna do an R. Kelly on the community.
Right.
All right.
Oh, and then tell you it's raining.
Yeah.
So basically, it's one dude who owns all this rave token.
Yeah.
Well, now that all these people are getting in, I mean, it almost hit $20. So, shit, man, that's a. Don't worry, I audited them.
Yeah.
The master auditor, Stu Boy.
I think. Well, let's wrap this up. I got some pad thai I want to go eat.
Got some pad thai. No trans over there. No trans Thai.
No trans Thai.
No, this ain't California, boy.
That's right. This is country. All right. So, what are your closing thoughts?
Oh man. Well, with the Aave thing, I would be cautious. If you're worried about, or if you have any liquidity on there and you're worried about their future, I mean, David's a great expert to kind of follow because he's up on this more than anybody else. And if he's very cautious and pulling his liquidity off, I would want to follow the same. And it's always good to just practice safe security, safe. They say safe sex, centralized exchange, but safe DEX. And don't go chasing this rave token.
Don't go chasing
water. Don't go chasing rave down.
Stick it to the river.
I really get. Might get pegged at the rave, man.
Right?
Go. Ooh. But yeah, just be safe out there. I know the markets have been pumping a little bit here lately, but yeah, I'm getting ready to start inching back in the markets myself. So, and hopefully there's a couple airdrops I'm waiting on next couple months that on both wallets. So hopefully we'll see something positive. One of them has been over a year that I've been farming. So
you know what? This is a great summary of this episode. So what did we learn today, kids? Say no to pegging, but we love a good peg. DP is not good. That's debatable. And gay chicken. Yes. That is a beautiful summary of this episode. And with that, till next time, Veteran Crypto out.
Peace out.